Looking forward to your annual income can be exciting, but the thought of the taxes that will be withheld can quickly dampen your mood. It can feel like you're working for two companies but only getting paid by one. However, there may be a way to reduce your tax bill that is within the bounds of the law. Before we dwell into that, it's important to clear up a common misunderstanding about tax payments. Staying within a certain tax bracket can prevent you from having to pay a higher percentage of your income in taxes. But it's worth considering that, as your income increases, your tax liability may increase as well. It's possible to have a lower effective tax rate than others without using a tax haven. However, it's important to follow the prompts correctly and enter legitimate numbers to ensure that federal tax collections meet their potential. You can check the government's official website for accurate tax payment records. Understanding tax brackets can also help you navigate the system more effectively. The progressive tax system means that as your income increases, your tax rate may increase within each bracket. However, being in a certain tax bracket doesn't automatically mean you'll pay that tax bracket rate. That is why, on InvestWise, we provide you with all of the information you need to be on time with your investments. If you find it useful, please consider hitting the like button and subscribing. If you want to keep more of what you earn, it's important to optimize your earnings legitimately. Overpaying taxes can be disappointing for business owners, but once you know how to reduce your tax bill, you can start making amends. So don't be discouraged by the thought of high taxes. There are strategies you can use to keep more of your hard-earned money. My effective tax rate is higher than hers, even though my marginal tax rate is lower. This is because I run my business from home, which means I don't have to pay federal income tax on the first $70,000 to $80,000 of my income. However, my friend contributes a larger percentage of her income to Social Security. If you have a legitimate business, you may be eligible for special tax breaks. These deductions can include any expenses related to running your business, which can help reduce your tax liability. If done correctly, you should be left with a sizable sum after taxes. As a business owner, you may also be able to deduct some home expenses with the home office deduction. But this depends on how often you work from home and whether your business is a formal corporation or LLC. If you don't have a business already, starting one can help you qualify for tax breaks. My second piece of guidance is to start a retirement savings plan. It's easy to put off thinking about retirement, but starting a retirement fund can have significant financial benefits. Some investments, like junk bonds, may be taxable, so it's important to consider which investments work best for tax-deferred retirement accounts. A retirement account can help with two issues. Firstly, the amount you withdraw each year from your taxable retirement account is limited, which can help with tax planning. Secondly, planning for retirement is an important step towards securing your financial future. So take the time to plan for retirement and enjoy the peace of mind that comes with having a nest egg saved for your golden years. When planning for retirement, there are many different factors to consider, including how to maximize your savings and minimize your taxes. One strategy that many people overlook is taking advantage of retirement account savings, which can offer substantial tax benefits. During the accumulation phase, the earnings on retirement account savings are not subject to taxation. This means that if you invest in the stock market, any gains you make will not be taxed as long as they remain in your retirement account. This can be a powerful tool for building wealth over time, as it allows your savings to grow more quickly. Once you reach retirement age, you can withdraw the money from your retirement account tax-free. This means that you can access your savings without having to worry about paying taxes on them, which can help to stretch your retirement income further. It's important to note, however, that there may be penalties for withdrawing money from your retirement account before you reach retirement age, so it's important to plan ahead and avoid making early withdrawals if possible. Given these tax benefits, it's worth re-evaluating your retirement strategy to see if you can take advantage of retirement account savings to maximize your savings and minimize your taxes. By doing so, you may be able to achieve your retirement goals more quickly and effectively. In addition to retirement account savings, there are other tax strategies you can use to reduce your tax liability and keep more of your hard-earned money. For example, you may want to consider making use of a health savings account. An HSA is a type of savings account that allows you to set aside pre-tax dollars to pay for qualified medical expenses. This means that you can deduct the amounts you contribute to your HSA from your taxable income, which can help to lower your overall tax liability. In addition, any money you contribute to your HSA grows tax-free, and withdrawals made to cover qualified medical costs are not taxable. If you don't have health insurance, an HSA can be an especially valuable tool for managing your healthcare costs. Even if you do have insurance, however, an HSA can still be a smart choice, as it can help you save money on taxes and motivate you to prioritize your health. Investing in an HSA is a choice you won't regret, as it can help you save money and stay healthy. By taking advantage of tax-advanced saving strategies like retirement accounts and HSAs, you can build a more secure financial future for yourself and your family. If you're like most people, you may not have caught the allusion in the first sentence of this text. It refers to being in excellent physical condition, which can be achieved by setting aside money for medical expenses. Did you know that doing so can also help you pay less in taxes? Charitable giving is another strategy that can be effective in reducing your tax liability. Many wealthy individuals engage in acts of charity not only because it's a good thing to do, but also because it saves them money. They have access to knowledgeable accountants who can advise them on how to move the company forward and maximize tax savings. By making charitable contributions, donors can take advantage of various tax deductions. Cash, clothing, or other goods can be donated, and the IRS may let you deduct up to 20% of your total donations to charity. It's important to keep all paperwork related to your charitable efforts, as you may be asked to prove your giving at the end of the fiscal year. Investing in municipal bonds is another option to consider when looking for tax-saving strategies. Municipal bonds are issued by governments in exchange for promises to repay the principal and interest on the bonds at the end of the set period of time. These bonds are used to fund public projects like schools, parks, libraries, highways, and bridges. One of the benefits of municipal bonds is that the interest is not subject to federal income tax. This means that you won't have to pay taxes on the principal or interest when the bond matures. Municipal bonds are considered low-risk investments, making them an appealing option for many investors. When investing in municipal bonds, it's important to consider the term and tax break. Buying a bond with a term between 2 and 30 years and a tax break of at least 5% can help reduce your taxable income. Investing in 30-year Treasury bonds, for example, would guarantee a compounded return over that time frame. It's important to note that some of the suggestions mentioned in this text could be considered illegal, so it's crucial to consult with a financial advisor before making any investment decisions. However, by taking advantage of tax-advantaged saving strategies like retirement accounts, HSAs, and municipal bonds, you can reduce your tax liability and keep more of your hard-earned money. Are you feeling lost when it comes to managing your finances? Fear not, because there are several strategies you can implement to take control of your financial situation. Let's dive into some useful tips that can help you secure a better financial future. Firstly, if you're looking for investment options, you might want to consider municipal bonds. Municipal bonds are debt securities issued by state and local governments. They are a great way to invest in public infrastructure projects, such as schools, highways, and hospitals. However, it's important to note that depending on where you live, you might have different options available. Therefore, it's essential to visit your government's website to learn more about your local municipal bond options. If you're looking to reduce your tax liability, collecting money that won't affect your tax situation is a smart move. One way to do this is by investing in sources of income that are not subject to taxation. This could include investing in municipal bonds or a Roth IRA, for example. By doing this, you can maximize your returns while minimizing your tax burden. All of the tips mentioned are interconnected and designed to help you in the long run. It's important to keep in mind that you don't have to punish yourself by living paycheck to paycheck. Investing can provide you with a secure financial future and help you achieve your goals. It's important to note that managing your finances is not just about lowering your tax bill. It's about understanding your options, making informed decisions, and taking control of your financial future. By following the tips mentioned above and seeking out additional resources, you can achieve financial freedom and peace of mind. If you love this video, subscribe, leave a like, and watch this one too.